Morning, everybody. John Caruso coming to you here for the morning of June 16th with a quick look in on the market. Of course, today is FOMC day. We will hear from Jay Powell and the Federal Reserve at 1 o'clock Central Time. Taking a look at stocks, we are seeing some softness here off the open. The Russell 2000 is the weakest, down about 45 basis points, hovering right around 2,300. We are seeing some more strength in the energy space. We've got crude oil prices trading in the 72 handle. We do have immediate term upside to just north of 73 here in the near term. However, crude oil prices are getting a little top heavy here, but that trend is certainly the strongest on the board right now. Crude oil prices should continue to trade positively going forward. Of course, today, Fed Day, 1 o'clock, we're going to hear from the Fed. We don't expect any adjustments in policy. We do know that the Fed's dual mandate is, of course, controlling price inflation as well as full employment. And the Fed has largely dismissed inflation as transitory. And I did actually find it interesting. The Bank of America surveyed fund managers across America, and 70% also do believe that inflation is transitory. And we are actually starting to see that show up in some of the data as well, where the CFTC futures and options positioning is actually showing a net long position, a pretty good size net long position in the 10-year notes, betting that interest rates fall further from here as opposed to rise. So Wall Street, in my opinion, is either very offsides here or they're correct, and the Fed stating that inflation is transitory is the correct call. So we'll see going forward. We do know the CPI numbers, the PPI numbers have been very hot. The one thing we want to keep an eye on is, does inflation remain sticky, or do we continue to see more acceleration going forward? I think it's going to be interesting. We actually do believe that inflation is going to be sticky. However, the rate of change in the inflation numbers on a year-over-year basis have likely peaked, and the peak was probably in May. So keep that in mind going forward as well. Like I mentioned before, largely we're not expecting any policy adjustments by the Fed. We did hear from Paul Tudor Jones on Monday, who suggested if you do not see any movements by the Fed, if they do not, quote unquote, correct course, that you slap the inflation trade back on. The inflation trade would be betting long risk assets, commodities, stocks, betting for an uptick in 10-year yields and bond prices to come in from here. So interesting. We're going to see what develops at 1 o'clock today. We'll see you back here soon. Hopefully that was helpful. If you have any questions, feel free to reach out to me. John Caruso, RJ O'Brien. We'll see you back here next time. Thanks.